So Meta is down double digits after they reported Q3 2025 earnings. In a previous video, I did an analysis on the bear case. I don't think there are any bear arguments that really hold up. In fact, I think the media really doesn't understand the bear case on Meta. They're focusing on CapEx and increasing expenses and the fact that they don't have a cloud computing business. That's not the bear case. The bear case comes from Europe, comes from the LPA changes that are likely going to happen in this quarter, which could affect the top line guidance for Q4 or for Q1 next year. That's the real risk that I see. The fact that the company increased and it's aggressively increasing CapEx in 2026, it's not a bear argument. In fact, if Zach came in during the earnings call saying that, I'm actually lowering my CapEx guidance, that will be the only thing that I will need to know to sell everything and short this company. Yeah. So until the CEOs are reiterating their plans to spend CapEx, until they keep, pulling coal into the fire, I'm ultra bullish on these stocks. All right, let's start with the upside. So we have family of apps. This is the main segment. We have 3.5 billion people using at least one app daily. This is not monthly, this is daily active users. And daily active continue to grow across Facebook, Instagram, and WhatsApp. Instagram reached 3 billion monthly active users. The US time spent on Facebook and Instagram grew double digits year over year. This is key because that compute that Meta is using is mainly for the recommendation algorithm. So Meta is trying to find out what do you like, and then is going to recommend you more of the same thing. The fact that time spent on the platforms went up double digits, whilst you don't have a pandemic, there is no external tailwind to lead to this adoption and to this increasing in time spent on the apps. It's a clear evidence that AI is working. Now, of course, there is a concern. Is Meta overbuilding? And as Mark put it in the earnings call, he said, who cares? He basically said that. He basically said, if we are overshooting on the build out and we build more than what we should, we're going to catch up a few years down the line. It's not the end of the world. If you look at AI tokens that are being used by large language models, that number is not coming down. And that growth is still going to be in the freaking triple digits into the end of the decade, at the very least. So I'm sorry, but I don't buy the arguments from the bears. In fact, if that was the case, if you look at one of the most recent news was related to a record 30 billion bond offering, and that was after the earnings. You have major banks among the book runners in this deal. I don't think banks will have been involved in such a deal if they weren't bullish on the AI theme. All right, now let's go back to the upside analysis. What we have is the global time spent on apps, 5% more year over year on Facebook. Threads went up 10%, and that was driven by ranking optimizations. Key. The reason why Meta is building out data centers is because of that. And of course, you have the free content, and then you have the paid content, which is not paid content, but it's ads. So you need to know who to show the ads to. For example, I get ads that are really ridiculous because I don't buy from ads, and the algorithm pretty much gave up on me, and they just show me the highest top of the funnel ads you can imagine from Temu or any other of these BS providers, which is fine, because if you show me a very hyper targeted ad, lower funnel, for I don't know how to make videos on YouTube, I wouldn't buy, because I don't buy from ads. But call me crazy, But yeah, I'm not falling for I don't know. To me it's difficult to analyze Meta because I don't believe in ads, and ads and Meta are the same thing. So it's a bit difficult for me to have a high conviction on the company, but I do have it, hands down. People are, not everyone is like me. So, right, moving on. Video. We have Instagram video. The time that was spent was up 30% year over year. That's a lot. And Facebook surfacing 2x as many same-day reels as of the start of 2025. And here is where I'm thinking whether AI content was behind the growth that we have seen in video engagement. So I'm just wondering whether Vibes, I think I have here a link on Vibes, and Meta AI was behind the improvement. Moving on, Threads daily active users was 150 million, and then there were more than 1 billion monthly active users that already use Meta AI. Now, moving on, Reels. This is key. The annualized run rate is over 50 billion, and this is just Reels. Now, it seems that there is a pivot in regards to the type of content that people are using, particularly in Facebook and Instagram, from text to video or images to video. And this is clearly seen here. Video surfaces, it says it drove an impression growth. Engagement and user growth was particularly on video surfaces, right? So that's where the engagement and the user growth is happening. And I think it has to be related to the growing AI-created content corpus. And it's quite interesting because Mark said during the call, he said the improvements in our recommendation systems will also become even more leveraged as the volume of AI-created content grows. I believe is because now everybody is able to be a Hollywood director, and the content is going to blow up. So the more content you have, the easier it is for the algorithm to know what you like, because it's going to show you a lot of things, a lot of variety of things. And now it's going to say, so this person maybe likes this, but he likes it in this way or this shape or this color, or it's going to be wild. That's my assumption on what's going to happen with their AI recommendation algorithm. Now, on the advertisement front, end-to-end AI-powered ad tools, the annualized revenue run rate is 60 billion. And I believe one of the upsides was Advantage Plus right here. The company noted that they completed the global rollout of streamlined campaign creation for Advantage Plus. And I think this is quite bullish because Advantage Plus, it's pretty much an autopilot. You want to start a campaign on Facebook, and you can either target your demographics, keywords, etc., or you can press Advantage Plus, you leave it on autopilot, and you burn money like no tomorrow. And the reason why they have, for example, Advantage Plus for lead campaigns sees 14% lower cost per lead on average versus non-Advantage Plus. The reason why Advantage Plus is sticking up is because it's useful. It's because people are using it and they see the upside. So it's working. I'm not a fan of Advantage Plus. Again, not a fan of ads. I've been running ads on Facebook, on Google, on YouTube. I don't know. I haven't seen enough traction to justify the spend because I always spend more than what I made. Eventually, to me, what matters is not the cost per lead, it's the cost per sale. That's the only thing that matters to me. So cost per sale didn't really made sense for me. And yeah, Advantage Plus was not in my favorite list because I didn't have control over the parameters that I can select. I didn't have control over what demographic or over where am I targeting my ads, what interests, what age group, etc. So I don't know. I was not bullish, but it seems like they have some traction. So yeah, it's fine. Now, when we look at the average price per ad, that went up 10% year over year, with impressions up 14% year over year. Again, price per ad is going up because these ads work. Not for me, but for other advertisers, it seems that this is working. And the fact that it's a double-digit increase. And again, from a macro perspective, this shouldn't have happened because you have unemployment high in the US. You have a lot of skepticism. The US consumer is broke. They have too much debt. The car loans are people are starting to fail, especially the lower end group. There is a lot of macroeconomic headwinds, and the fact that the company is managing to pull up an increase in the average price per ad, call me crazy, that's bullish. Now, moving on, we have the business messaging and the business AI monetization ramp. So the family of apps, this is the key segment to have to keep an eye on. The other revenue of the family of apps, this includes mainly WhatsApp and Meta Verified. So the other revenue was up 59% to 690 million. Clicked WhatsApp ads revenue was up 60% year over year. The fact that these two are very correlated, so clicked WhatsApp and WhatsApp paid messaging up by the same amount, makes me think that, most of this growth was driven by WhatsApp paid messaging. And this makes sense because if you are an advertiser and if you have true brain cells, you can choose whether to text with your potential customer or you can have a hyper complex prompt along with a context that has all the information about your product, your business, absolutely the Q&A to almost any question that you can imagine. Why are you going to spend time on WhatsApp? You can have your AI agent. And the fact why this is going up 60% up year over year, it's telling you that something is going on. And that something is AI adoption, particularly by marketeers that are lazy and smart, in my opinion, to not text to their clients. So, right, moving on. In the US, they said that they're rolling out capability for merchants to add business AIs to their website to support full funnel from ads to purchase. What's that? In the website, they say this is an AI sales concierge. I don't know. This is like one of those, in the lower right when you have a help button, or even if you press it or you don't, many times you don't press it, it just pops up. Hey, hi, I can help you out. And it says that this is personalized to each shopper. Makes me think whether this business AI, which is an AI agent, whether that will have information to your cookies. So if you have been on a site, I don't know, anything very related to that product is going to say, hi, I noticed that 3 days ago you have been on this site. Are you interested in this product? This makes me very, very, I wouldn't say suspicious, but I think the right word is, bullish. Let's keep it bullish. All right, moving on. We have Meta AI, consumer adoption. As I said, Meta AI exceeded, well, this is Meta AI. This is not a family of apps. Meta AI, 1 billion monthly active users, 20 billion images that were already generated, Vibes, which is one of these new products where you can create a video similar to Sora. Vibes launched, led 10x increase in media generation within the app. Now, when you think about generating a text versus generating a video, generating a video requires way more compute, way more. So the fact that Zach increased or hinted towards an significant increase in CapEx in 2026 is not a concern to me. Now, moving on, Vibes, the retention says that it's looking good. The usage is growing quickly, week over week. And this is key. When you have not month over month, but week over week increases, that's bullish. And there is a ramp planned over the coming months. Something to have keep an eye on in the next earnings release. Threads up surpassed 150 million daily active users. Q3 drove 10% more time spent on Threads and launched direct messaging in Q3. Ads are now running globally, although the company didn't really provide any insights on how much they made or any other metrics like maybe an annualized run rate. That would be really good for ads. on Threads. I'll keep an eye on that kind of announcement. And moving on to the reality AI. Well, we have the new Ray-Ban Meta and Oakley Meta Vanguards that are selling well. I'm not really bullish on this. I mean, it's a really good idea. In the future, this is key. And I'm thinking that 5-10 years down the line, I'm going to have one of these, hands down, no doubts. But it's too early. I think that the product is not there yet. And I think the main use case is for this device to learn who you are. Why? Because if you have all that data, you can train a large language model, an open source large language model, to be you. Just imagine that. If you wear that headset all day long, you're able to train a large language model on how you act, on how you answer, on what do you do. If this is the context, this is what you do. You are essentially training a large language model. But you could do this yourself. I'm not saying that Meta is going to train a large language model with your interactions. I'm saying that myself, I already trained the large language model on my own voice, and it's crazy to see that if I give a plain text and I say rephrase it using my voice, it's my voice. It's me, So I can only imagine what would have happened if you're able to, transform the data into ones and zeros that can replicate who you are. In other words, you become invincible. Not bad. So Reality Labs revenue was 470 million, up 74%, but that was due to a front load effect because retail partners were stocking up Quest. These are the headsets for holidays, and they had some strong AI glasses revenue. The problem is that Q4, they don't expect an increase in revenue because, the Meta Quest 3S was a big tailwind in Q4 last year, and they don't have such effect now, and the glasses are not enough to compensate, to offset that headwind. And in regards to the financial performance, just a quick look at the charts. This is Reality Labs. I mean, let's look at revenue first. This is not a bubble. This is not a bubble. Look, just look at this shit. Let's look at the quarterly growth since December 2022. Not a bubble. Double-digit growth. And yes, some people can argue that, after the pandemic, it was really high because during the pandemic, at least at the very beginning of the pandemic, the consumer spending was not there. After a few quarters, it blew up. But I can see rates increasing, especially this year, 16%, 21%, 26% year over year. Not bad. And when we look at Reality Labs, I don't like this segment because if we look at profitability, it's burning money, 4.4 billion versus 25 billion in EBIT for family of apps. So I'm not that keen on Reality Labs, I have to say, for now. Moving on, we have the cash from this is operating cash flow, okay? Operating cash flow growing above 20% for, over a year already. I don't know. Call me crazy. Again, call me crazy. But if valuations weren't justified, that should have been, negative. Let alone, not growing. This should have been negative if you really believe that there is a bubble. Speaking of bubbles, the company doesn't have enough compute. They have to go to infrastructure companies like CoreWeave. Again, why would you go? Why would you mess around with third-party providers if you're already spending 72 billion up to 72 billion in CapEx this year, with plans to massively increase that next year? Why are you signing up this deal? Again, common sense. You wouldn't do this if there was a bubble. You wouldn't do this. Finally, when we look at what the street expects moving ahead, we have a very decent 2026, where the street expects profitability to increase 17% year over year. And when we look at revenue, yes, the growth rate is going down, but the reason is because the overall value goes up. growing 235 billion in revenue is not as easy as growing 200 billion. So the more revenue you have, the more difficult it is to grow that. And of course, this is an ad business, and it really depends on the macroeconomic picture. What happens if you have unemployment ticking up? What happens if AI is replacing jobs? People are not going to buy from ads, And if people don't buy from ads, advertisers are not going to be there shilling their products. So, speaking of shilling products, Guidance Terminal. This is my software, by the way. Really good. It took me a lifetime to build this tool, and it's really helpful to analyze earnings, particularly for mega caps. I really recommend you have a look at it. It's free. I mean, it has a lot of features that are free. The features that are paid, usually at this stage, you wouldn't really pay for the app because those features are very convoluted, like, looking at earnings from, a couple of quarters ago. I don't think you will do that. I think most people will look at the most recent earnings and not at the past. Anyways, bullish on Meta, and I want to know your thoughts in the comments. I want to know why you think that this chart is going to continue to sell off. And by the way, if you look at the chart, just look at the chart, yeah? Call me crazy, 600. Okay, so this red line is in the 600s. It bounced off. And overall, after earnings, the sell-off was mainly driven by Barry, was mainly driven by the CFO of OpenAI saying that we need government backing. And that was just a misinterpretation. She didn't say that they need that. She said that in the industry of LLMs, it would be really helpful if the government will provide some guarantees, because that way banks will just pour money like no tomorrow. So that was just one sentence, media took it out of context and that led to a sell-off. Call me crazy, the chart looks fine. And I think from next week on, this is going to recover. I'm considering to buy calls, but overall, I'm considering to buy calls on the SOXL. I know that this is out of the scope of this video, but I'm very bullish on this, because this, if you're betting on AI, you're betting on the SOXL. So this is the one that I will go for. I was already fully invested, but I sold off, interestingly enough, in mid this week. So good job for me. And now I have to load back, especially on Monday. All right, that's it. If you have any comments, feel free to share them in the section, and I will try to reply. Also, if you want to leave a post with your thesis on Meta, feel free to do it there. I will personally reply to your thesis. So yeah, go there on my app, engage. I need users. I need some money. So go on. It's free, and it's possibly not going to be free for a lot of time. So please have a look at it. Thanks for watching, and I hope to see you in the next one.